Hi, this is Manesh Patel at IMTF Trade. Today we want to address the question that a lot of people are asking, are the markets going to crash this year? It's not about 1 or 2 days or stuff people are worried about. They're kind of questioning what's going to happen with the market here in the US and whether it will crash anytime this year due to all the political unrest, interest rates possibly going up, and all kinds of other things and excuses people are talking from COVID and so forth. So that's the magical question there. There's a lot of X factors that are getting involved right now, and it's making a lot of people nervous, especially with the huge gains last year and towards the beginning of this year and things that happened with Game, AMC, and so forth. And then a lot of the things with Spark companies that are going on. So it's making a lot of people nervous on what's happening with the markets. So first, you got to remove your emotions and you got to see the actions in the chart and look at past historical patterns to sit there and do forecasting. And that's kind of what I want to show you today is answer that question with a high probability. Let's start off and we're going to look at the VIX, specifically at the VIX, and try to address the question on whether the markets are going to crash this year. In our weekly workshops, which links I will provide for you, you are more than welcome to freely attend. Every week I have these weekly workshops where we go through market analysis. In the morning one, it's Europe and Asia along with US, and the evening is specifically US. We go through that, Bitcoin, futures such as gold, crude oil, and look at trading opportunities, and then we go for some type of lesson and so forth. I will give you guys the link on the charts, and you could see there, and you could more than welcome to register for free. But anyways, in our weekly sessions, when we go for a market review for the US, we look at two different products. One is the E-mini S&P 500 futures, and then we look at the VIX. Why do we look at two different products? Well, the E-mini is what institutions around the world look at. They don't really look at the NASDAQ or the Russell or the Dow. They look at the E-mini S&P 500 futures. A lot of them will also use it to hedge. The other product we use is the VIX. It's an inverse relationship to the stock market, which represents the volatility. So if the stock market's going up, the VIX is going down. If the stock market's going down, the VIX goes up. So it's an inverse relationship. And what we do is we don't rely on one product to tell us everything. We look for both products to tell us the same story. And when they do, we know the markets are going to go in that direction. And this is something we've been doing every week for years now, and it's worked really well in helping our students forecast exactly which way the market's going. So what I want to do is use the VIX to answer that question, okay? So here's the VIX here on the weekly time frame. We're going to use a weekly time frame because it gives you a good horizon of what's going to happen in the next couple of months, okay? We're going to use the Ichimoku system to keep it simple. And you really just need to pay attention to price in respect to where it's at with this cloud. So if price is below this cloud, it's bearish. If price was in this cloud, it's consolidating. If price is above the cloud, it's bullish. Okay. So this is VIX. So if we want the market to go up, we want the VIX to go down. So the key thing for a bullish trend is that we want the price to be below this cloud and never to close above it at all. And that's the key thing you have to understand. And what happened with COVID is that this cloud got destroyed, moved all the way up and got above us. Okay. Now the key thing is that can we sit there and tank? If we tank, what happens is this price gets above this cloud. So if price gets above this cloud, that's basically when people think the markets are crashing, they're tanking, whatever words you want to use. So that's what we're looking at is what's the probability of price to sit there and get above this cloud? And that's the thing we're answering. And notice one thing, this cloud is projected 26 weeks into the future, and this was what allows us to do forecasting. The key thing here is that notice one thing. To get above this cloud, it has to go for this thick cloud here, which is big consolidation area. Initially, it was very thin here. Then it got thicker and thicker and thicker and thicker with time. And that's the key here. So for the markets to crash, it has to go for this cloud here, which is really thick. That basically tells you there's a low probability for the markets to crash all the way to September. So until September right now, the probability is very low for the markets to crash, and should remain in a bullish scenario. We can go for some corrections anywhere from 6% to 10% and 12. However, it does not mean the markets are going to crash. It also doesn't mean the markets are going to go straight going up at all. It just means we're in a bullish nature. We could sit there and do bullish consolidating. We could start little trends here and there. But either way, the probability of us crashing is very low this year, at least forecasted till September. Reason why this cloud is getting thicker and thicker and thicker, which makes it very hard for price to get above the cloud. Now, remember, that's the probabilities. There's no 100% guarantees out there, but this is basically our forecast. And this is something that we sat there and said in our weekly sessions. And then what we do is every week we confirm with actions in the market that that forecast is correct. But our forecast right now is for the rest of this year, the probability for us to crash is pretty much very low now. Due to this cloud getting thicker and thicker and thicker. If it was going to sit there and crash, then it should have sat there right here where the cloud was very thin here. It had an opportunity right there to get above it, right when the U.S. elections were occurred. It did not do that at all. It went down and then basically been consolidating here. And as it's been consolidating, this cloud has gotten thicker and thicker and thicker moving forward. So you could see that the probability is low here and going forward. Okay, and you could see before COVID what happened. We were below this cloud, below this cloud, below this cloud, and then all of a sudden COVID hit in March, and that's when we got above this cloud here. We stayed above that cloud there until basically August of 2020. That's when things kind of calmed down, and we got below the cloud here, and at that point, the sentiment changed from being bullish to bearish, which is exactly what you need for a bullish trending market. Okay. If you have any questions, you're more than welcome to email us at info@eiicapital.com. Also, as I mentioned, you're more than welcome to join us on our weekly sessions where we do go for the market updates every week. We do forecasting, and then we look for actions every week to support those forecasts. That's pretty much how you trade probabilities. Thank you.